So April is Financial Literacy Month.
So to celebrate, CBS News business analyst Jill Schlesinger answering some of your most frequently asked questions. Jill, good morning. It's great to see you. Look,
You have a funny way of celebrating.
Yeah, a funny way of celebrating. There's been so much talk as of late about the bond market. Can you explain exactly, because a lot of people have asked about this, what exactly is a bond?
You know what? It's a loan. So when you buy a bond, you're lending money to an entity. Could be the U.S. government, could be a state, could be a city, could be a company. When you buy that bond, that loan, it's established for a predetermined period. That's called the term. And also, you have a predetermined fixed rate of interest that you earn on that money that you're lending. Now, the borrower is on the hook to make those interest payments and also to repay that obligation in full at the end of the term. Remember one thing about bonds. If you think that you're lending money to a risky endeavor, you're going to demand more interest. That's why when you lend money to maybe a brand new company, you get paid a higher rate of interest than lending money to the U.S. government because you know the U.S. government's going to repay the loan. Also, one other thing, bonds can fluctuate in price. It's just based on where prevailing interest rates are. And if you hold an individual bond till the term, you'll get your money back. But during that term, you can get some bond price movement. That's what we've been talking about this month after those tariff announcements.
Okay, another frequently asked question you get, and this actually reminds me of some good advice someone gave to me, is that as soon as your baby is born, start contributing to their college fund because of compounding. Give us the sort of the brief explainer on compounding.
It is a magic word and it is a magic process. So let's keep it really simple. Let's say we deposit $100 in the bank and the bank's paying us 5% annually. At the end of the first year, our $100 that was just sitting in an account would be worth $105 at the end of the first year. And in the second year, the cool thing is, again, that original $100 is in the account plus that $5. All that money will earn another 5% interest. And that is the compounding interest that we love so much. You put $100 in, 2 years, it's worth $110.25. Now, just remember, the cooler thing about when you look at compounding is time.
Right.
Time can supercharge how much your money can grow.
All right, we only had time for 2 questions today.
Yeah, we'll
but we
get
have
you
to
on
do
the
this
next
again. We have to do this again,
April's
Jill.
not over.
April's not over.
Continue celebrating, Jill.
Yeah,
Thank
celebrating,
you.
Jill. We appreciate you as always. Thanks. You can see Jill regularly on CBS Mornings and the CBS Evening News. And for more analysis, you can go to JillOnMoney.com.